Good evening, and welcome to the AJP Northeast Asia market close. The artificial intelligence trade that powered Northeast Asia to record highs suddenly went into reverse today, and the market that depended on it most, South Korea, took the hardest hit. The same force is still driving this region, the global build-out of artificial intelligence and the chips behind it. But today, each market reacted differently, as investors questioned whether the rally had simply gone too far, too fast. Korea suffered a near 10% plunge as traders rushed to lock in profits in the semiconductor names that had carried the market for months. Japan fell sharply as investors dumped memory and artificial intelligence plays despite an ambitious new government investment plan. China also declined, but its weakness ran deeper than chips, extending into consumer and financial heavyweights as doubts over domestic demand resurfaced. The AI story is not over, but today was the first real test of how much optimism had already been priced in. The KOSPI plunged 9.99% to around 8,204, wiping out weeks of gains in a single session and exposing just how narrow Korea's rally had become. The sell-off centered on the semiconductor giants that had led the market to record highs. SK hynix tumbled 12.47% to around 2,555,000 won, or roughly $1,870, as investors took profits after its extraordinary run in artificial intelligence memory chips. Samsung Electronics dropped 12.31% to around 310,000 won, or about $227, reclaiming the title of Korea's largest company by market capitalization, as SK hynix fell even more sharply. Samsung Electromechanics slid 10.68% to around 1,990,000 won, or roughly $1,460, showing the selling had spread across the broader semiconductor supply chain. The decline was severe enough to trigger sell-side sidecars in both the KOSPI and KOSDAQ. Foreign and institutional investors dumped shares aggressively, overwhelming retail buying. Korea's greatest strength, its concentration in artificial intelligence and semiconductors, suddenly became its greatest vulnerability. China fell as well, but the story was broader than artificial intelligence. The Shanghai Composite dropped 1.58% to around 4,097, as weakness spread across technology, consumer, and financial shares. Cambricon Technologies, China's marquee artificial intelligence chip designer, fell 3.38% to around 1,408 yuan, extending profit-taking after a spectacular rally earlier this month. But investors were also selling consumer names. Kuicha Mutai, China's largest liquor producer and a bellwether for household spending, fell 1.74% to around 1,220 yuan. China Merchants Bank slipped 0.58% to around 37 yuan, suggesting financial heavyweights were not strong enough to support the market. Investors were also watching the aftermath of China's 618 shopping festival. Rather than confirming a robust recovery in consumption, the event renewed doubts about consumer confidence and spending power. China did not simply suffer an AI correction today. It faced renewed questions about the strength of its domestic recovery. Japan was not spared either. The Nikkei 225 fell 3.46% to around 69,848, retreating sharply after one of the strongest rallies in its history. The market had support on paper. Tokyo recently unveiled a more than 10 trillion yen investment plan for so-called physical artificial intelligence, focusing on semiconductors, robotics, and industrial automation. But investors chose to focus instead on lofty valuations and signs of overheating. Kioxia Holdings plunged 14.69% to around 92,730 yen, as memory and semiconductor names came under heavy pressure. SoftBank Group, one of Japan's largest artificial intelligence investment vehicles, sank 9.59% to around 6,549 yen as investors rushed to take profits. Toyota Motors slipped just 0.89% to around 2,717 yen, outperforming technology names as money rotated back into more traditional industrial stocks. Japan's story today was not about abandoning artificial intelligence. It was about questioning how much future optimism had already been priced into the market. So, one trade, three different warnings. Korea exposed the danger of extreme concentration. Japan showed that even aggressive government support cannot fully shield overheated technology stocks from a correction. And China reminded investors that when domestic demand remains uncertain, even a diversified market can struggle to find support. The honest question into tomorrow is whether today's sell-off was a healthy reset after a historic rally, or the first sign that Asia's artificial intelligence boom has started to outrun reality. We'll be back tomorrow to see whether Korea can stabilize after its sharpest sell-off in weeks, whether Japan's AI names recover, and whether China's consumer story regains momentum. If this briefing helps you make sense of the region, please subscribe so you don't miss the next one. Thank you for watching AJP.